Okay, so today we're diving deep, really deep, into Cathay Pacific,
All right.
their 2023 annual report, to be exact.
Lots to unpack there.
It is, yeah. And we want to pull out kind of like the core insights, right, for you
Yeah.
about how their business is doing,
Yeah.
all the different parts of it, all the segments. How are they doing financially?
Mm-hmm.
What are their plans for building shareholder value? Like, how are they going to make money for the people who own the stock?
The questions.
Yeah, exactly.
Yeah.
So think of this as your super streamlined guide to understanding Cathay Pacific right now, today, and where they're headed.
Sounds good.
And our main source for all of this, obviously, is that 2023 annual report.
Makes sense.
Let's jump in.
Okay.
All right, so first, let's look at like how their business is actually split up
Okay.
into these different segments, right?
Yeah.
So they've got like premium travel, which is their, Cathay Pacific passenger services.
Right.
Fancy way of saying like the good seats on the planes.
Right.
And their goal there is like crystal clear. They want to be, quote, the world's best premium airline.
Ambitious.
It is. And it seems like 2023 was all about rebuilding and investing to get there.
Yeah. Lots of activity there.
Yeah. So they really ramped up their flight schedule. By the end of last year, they were already back to 70% of their pre-pandemic passenger flight levels.
Wow.
That's a big jump. And they were already flying to something like 80 destinations.
That's a pretty good sign of recovery, right?
Absolutely. Yeah. And you see it in the numbers too. Passenger revenue up a whopping 308.8%.
Really?
Yeah, hitting 55,951 million Hong Kong dollars.
Oh, wow.
It's a lot of money.
Yeah.
And their RPK, that stands for revenue passenger kilometers, it basically measures how far all their paying passengers flew in total, right?
Yeah.
That went up too by almost 400%.
Huge growth.
Massive. And the number of passengers they carried, that went up even more,
Wow.
over 541% to 18 million people.
That's a lot of people wanting to fly again.
It is, yeah. It's like, everyone was stuck at home and then they were like, all right, let's go.
Exactly. Pent-up demand.
Exactly. Now, their load factor went up too, by the way.
Load factor.
Yeah, that basically means how full their planes were. It went up to 85.7%.
So they're filling up most of the seats.
Most of them, yeah. But their yield actually went down.
Yield. What does that mean?
Yield is like how much money they make per passenger, per kilometer flown.
Oh. Whoa.
It went down by 17.7%.
So even though they're flying more people, they're making a little less per person.
Yeah, exactly. And that makes sense in a way, right?
How so?
Well, when an airline's trying to like bounce back, they might lower prices a bit to get people flying again.
Right. To attract those customers.
Exactly. So yeah, they're filling the planes, but maybe not making as much per ticket. But the huge increase in passengers more than makes up for that lower yield, right?
Yeah, makes sense. They're still generating that huge revenue growth.
Exactly. But it's not just about cramming people onto planes. They're also like really focused on making the experience better.
Okay. How?
So, for example, for all you Asia Miles members out there, they double the number of standard award seats. So more chances to use your miles for free flights.
Nice.
Right. They also reopened most of their global lounges. And they even launched a brand new lounge in Shenzhen.
Shenzhen.
Yeah, at the Shiku Cruise Home Port. And this is interesting. It's their first lounge outside of an airport.
Oh, interesting. Targeting those cruise passengers, maybe?
Yeah, maybe. Or just like recognizing that Shenzhen's a huge travel hub, right?
It makes sense, especially with the Greater Bay Area becoming more and more integrated.
Exactly. And they've got this new business class experience coming out next year called the Area Suite. It's for their long-haul Boeing 777.
It's fancy.
Oh, yeah. Top-notch luxury. They're also partnering with famous Hong Kong restaurants to create new in-flight menus.
Oh, that's a nice touch.
And get this, they're planning to offer free in-flight Wi-Fi to business class and Cathay Diamond members.
Wow, so they're really going all in on that premium experience.
Absolutely. Now, let's talk cargo. Cathay Cargo.
Okay.
They also had a pretty interesting year.
How so?
Well, all those extra passenger flights they added, that actually helped their cargo business too.
Really?
Yeah, because it gave them more belly space for freight.
Oh, right. They can carry cargo in the bottom of the passenger planes.
Exactly. So by the end of 2023, they had restored 85% of their cargo flight capacity compared to before the pandemic.
So almost back to normal.
Almost. Now, here's the thing. During the pandemic, cargo was booming. Everyone was ordering stuff online. Passenger flights were down. So cargo rates went way up.
Right.
So now things are kind of like normalizing, right?
They're coming back down to earth.
Exactly. But the cargo market is still pretty strong.
Yeah.
especially e-commerce. That's still a huge driver.
Makes sense. People are still shopping online like crazy.
Oh, yeah. And this is where Hong Kong's position as a major international air cargo hub comes in. And Cathay Cargo, they're the biggest player there.
So they're well positioned to benefit from that continued e-commerce growth.
Absolutely. Now, cargo yields did come down as more capacity became available. But get this, they were still 46.5% higher than they were in 2019.
Wow. So even with the normalization, they're still doing much better than before the pandemic.
Exactly. And demand from Hong Kong and the Greater Bay Area, that remains strong. And again, e-commerce from southern China, that was a major factor in their growth.
Yeah, it seems like the whole region is contributing to that cargo demand.
It is. And they're not just like flying stuff around, they're doing it really well.
Oh, how so?
They got this accreditation, CEIV lithium batteries, for both Cathay Cargo and the Cathay Cargo Terminal.
Lithium batteries, that's for like electronics and stuff, right?
Yeah, exactly. And those are tricky to transport safely. So this accreditation shows they're meeting the highest standards.
That's good to know, especially with so many electronics being shipped around the world.
Absolutely. Now, they did mention one challenge they face, which was the availability of spare parts.
Oh, that's a problem.
It is, yeah. It impacted their freighter services, but they're being proactive about it. They've implemented a preventative maintenance program to try and mitigate those supply chain issues.
So trying to stay ahead of the game.
Exactly. Oh, and here's something cool. Cathay Cargo is actually hosting the 2024 World Cargo Symposium in Hong Kong.
Wow, that's a big deal.
It is, yeah. It shows they're a leader in the global cargo industry. And they actually won a bunch of industry awards, too.
Like what?
Cargo Airline of the Year, Sustainable Cargo Airline of the Year Asia, Best Green Air Cargo Carrier, Best Cargo Airline Asia, Hong Kong User Experience of the Year Logistics. I mean, the list goes on.
Impressive.
Yeah, they're killing it in the cargo world. All right, now let's switch gears a bit and talk about their lifestyle segment.
Lifestyle.
Yeah, this is where they're trying to expand their relationship with customers beyond just flights.
Okay, interesting. How are they doing that?
So they relaunched Cathay Holidays, offering those exclusive travel packages. And they introduced Cathay's Pick, which is like curated travel experiences.
Oh, so kind of like recommendations and itinerary.
Exactly, yeah. And they've got this thing called Cathay LVAC, Music Up Close. It's a series of private concerts for their members.
Oh, wow. That's pretty cool. A way to reward their loyal customers.
Exactly. They're also really ramping up their partnerships with restaurants, shops, even transportation services like that Uber Taxi Pilot program. Also, you can earn and spend Asia Miles in more ways.
So trying to make Asia Miles more valuable and useful in your everyday life.
Exactly. And they're really focusing on the Greater Bay Area. They want to build a whole lifestyle ecosystem there, increase their presence in mainland China, grow their Asia Miles membership and partnerships. They even set up a new entity in mainland China, a wholly foreign-owned enterprise, specifically for this.
That's a big commitment to the Chinese market.
It is. And they're adapting to how people shop and consume media there. They did their first live stream on Douyin, the Chinese TikTok.
Yeah.
And they even opened a pop-up store in Shenzhen.
Wow, so really trying to connect with consumers in new ways.
Absolutely. And then there's Mileage for Good.
What's that?
It's a program where you can donate your Asia Miles to charity.
Oh, that's nice. A way to give back.
Yeah. And they've launched some new sub-brands too. Cathay Shop and Asia Miles by Cathay, just like expanding the whole Asia Miles universe.
So they're really trying to make Asia Miles a central part of their offering.
Absolutely. Oh, and before we move on, we got to talk about HK Express.
HK Express?
Yeah, their low-cost carrier.
Right.
They took delivery of their first 4 Airbus A321-200neo aircraft last year. Those were originally part of an order placed by Cathay Dragon, which they shut down a while back.
Right.
But these new planes, they're more fuel efficient.
Yeah.
So it's good for HK Express as they try to expand and take advantage of new opportunities in the region.
Makes sense. Fuel efficiency is key these days.
Oh, yeah. And the Cathay Group as a whole, they've made a big commitment to new aircraft. They're buying up to 32 new Airbus A321neo and A320neo aircraft for both Cathay Pacific and HK Express. They'll be delivered by 2029.
Wow, that's a lot of planes.
It is. It shows they're serious about growth. And they're serious about Hong Kong's position as a major aviation hub, especially with the new 3-runway system coming online.
Yeah, that's a huge investment in the future of Hong Kong aviation.
Absolutely. Now, all that said, they're not sugarcoating things. They're very upfront about the challenges facing the entire airline industry, like recruiting and training staff.
Yeah, that's been a big issue for airlines everywhere.
It has. And those global supply chain shortages. Those are still causing headaches,
Right.
but they say they're actively working to minimize those impacts in 2024.
So they're aware of the challenges and trying to address them.
Exactly. And finally, in terms of their different businesses,
Mm-hmm.
they talk about their associated companies, the ones they have a stake in but don't fully control. Those companies did better in 2023 than they did the year before,
Not good.
but they were still losing money overall.
So still some work to do there.
Yeah. And they attribute that to a few things, like some flight routes still haven't fully recovered, there's more competition in some markets, and then there's the constant fluctuations in fuel prices and exchange rates.
Right. Those can really impact an airline's bottom line.
Absolutely. And one important thing to note here, those fuel prices and exchange rates, they're recognized with a 3-month delay in their reporting. So the numbers might not always reflect the most up-to-date situation.
Oh, that's good to know.
Yeah. But overall, the picture from their different business segments is pretty positive. Strong recovery in passenger travel, a resilient cargo market, a clear push towards building a broader lifestyle offering, and those big investments in new planes.
Yeah, sounds like they're making good progress.
They are. But they're also facing those industry-wide challenges which could affect things going forward. Okay, now let's dig into the financials.
Right.
The big headline here is their attributable profit. 9,225 million Hong Kong dollars for 2023. That's a huge turnaround from the previous year where they lost 330 million.
Wow, that's a big swing back into the black.
It is. And their associated companies, like we said, they're still losing money, but they did a lot better in 2023. The loss was 1,562 million, which is a significant improvement.
So it's not just their core business, but their related companies are also heading in the right direction.
Exactly. Now, there's one thing I want to point out about that profit number. It includes a pretty big one-time gain, 1.9 billion Hong Kong dollars.
Oh, what was that from?
It came from the dilution of their stake in Air China. Air China issued a bunch of new shares, which decreased Cathay's ownership percentage. And even though they still own a lot of Air China, this accounting event generated a profit on their books.
So it's a paper profit, not from their actual operation.
Exactly. But the underlying performance of their businesses, especially passenger travel, that's what really drove the turnaround. They brought in 55,951 million in passenger revenue. And even though cargo yields were down, the total cargo revenue was still very strong.
Right, and above pre-pandemic levels.
Exactly. Now let's talk about something that every airline worries about. Fuel costs.
Oh.
Their gross fuel cost was 25,683 million, but they did some hedging, which means they locked in some fuel prices in advance, and that saved them money.
Good move.
Yeah, it was. They had hedging gains of 694 million. So their net fuel cost, after taking that into account, was 24,989 million. And here's something interesting. Their fuel consumption actually increased by more than their capacity increase.
So they're burning more fuel per passenger or per kilometer flown.
It seems that way, yeah. And there could be a few reasons for that. Maybe they're flying some less fuel-efficient planes again as demand picks up. Maybe they've adjusted their routes.
Right. Those things can all affect fuel consumption.
They do. But that fuel hedging policy, that's really important for them. It helps them manage those volatile fuel prices.
Makes sense.
And they've even given some guidance on their hedging plans for 2024 and 2025.
Oh, good transparency.
Yeah. All right, let's look at some key numbers from their balance sheet. Their total assets, how much stuff they own. And then they break it down further. Properties and other equipment. Intangible assets, which includes a big chunk of goodwill. Aircraft and related equipment, of course. Current assets, things they can quickly turn into cash. Long-term receivables and investments.
So basically a snapshot of their financial health.
Exactly. They also list their borrowings in different currencies. Hong Kong dollars, Japanese yen, US dollars, Chinese yuan.
Reflecting their global operation.
Yeah. And one good sign, they've got a lot of cash on hand. 15,530 million in liquid funds. So they're in a good position to weather any storms that might come up.
A strong cash position is always reassuring.
Absolutely. And they've got their cash flow statement in there, which shows how cash moved in and out of the business over the year. And they break down their revenue by segment. So you can see how much each part of the business is contributing. Cathay Pacific itself is the biggest, of course.
Yeah.
85,340 million in revenue. Then HK Express, 5,603 million. Air Hong Kong, 3,454 million. And their airline services division, 3,858 million.
So a good mix of revenue streams.
Yeah, exactly. Now let's talk about how they're planning to create value for shareholders. One big thing they did was redeem their preference shares.
Preference shares.
Yeah, those are a special type of stock that pays a fixed dividend. They decided to buy them all back.
Okay, why do they do that?
Well, it simplifies their capital structure, and it eliminates those fixed dividend payments, which could free up cash flow in the future.
Makes sense. So they can potentially use that cash for other things.
Exactly. Like investing in the business,
Mm-hmm.
or maybe even paying dividends to ordinary shareholders like you and me.
Well, that'd be nice.
It would. But there's a catch. They have to pay all the outstanding dividends on those preference shares first. Those are called arrears of dividend.
So ordinary shareholders have to wait their turn.
Yeah. Now, there was some activity with their ordinary shares, too. They issued a small number of new shares, about 700,000, because of a convertible bond conversion.
Convertible bond.
Yeah, that's basically a loan that can be converted into stock under certain conditions.
Oh, okay.
But there were no share buybacks, and no ordinary dividends were paid in 2023.
So right now they're focused on strengthening the core business, getting rid of those preference shares, and paying off those arrears of dividend.
Exactly. Once they've done that, then they can start thinking about rewarding ordinary shareholders. Okay, so big picture time. How's Cathay Pacific doing?
Well, they're definitely on the right track. That huge swing back to profitability is a great sign.
It is. But they're still rebuilding. And those industry challenges we talked about, those are still there.
Right. Those are factors they can't control.
Exactly. But they're making the right moves, investing in new, more fuel-efficient planes, focusing on customer experience, expanding into new markets like the Greater Bay Area.
Yeah, those are all smart strategies.
They are, and they're being realistic about the risks. They're watching things like workforce capacity, the geopolitical environment, IT security. All those things can have a big impact.
So managing risk is a top priority.
Absolutely. Oh, and one last thing. They expect to recognize another gain in 2024 from that Air China stake, that deemed partial disposal we talked about.
Right, right. So that could give their earnings another boost.
It could. So, looking ahead, Cathay Pacific is in a good spot. They've recovered strongly. They've got a clear vision. They're investing for the future, and they're being proactive about managing risks.
Sounds like a good company to watch.
Absolutely. So, here's a thought for you as we wrap up. Considering everything they've accomplished, what do you think are the biggest challenges Cathay Pacific might face as they try to become one of the world's greatest service brands?
That's a good question.
Right. And how might things like the global economy or geopolitics affect their journey? Something to think about. Thanks for joining us for this deep dive into Cathay Pacific.